All right, everyone, welcome back to the channel and thank you for tuning in to another great video. Let's talk about saving money, okay, to fund your brokerage account. So many people are interested in this topic because they want to figure out, how much should they actually have, okay, put away in savings to be able to fund an account when they're ready to start trading, all right, meaning going live. Now, I'm not going to tell anyone a certain dollar amount, as far as what you should do with your own money. I'm just going to basically give you an example, which I feel is an appropriate amount of money, a correct amount of money that you possibly want to try to start with, okay? Not telling you again that this is the exact penny or the amount you need, but if you follow through with the video, you'll understand the reason why, okay? Because I'm talking about being able to, one, stay in the game, protect your capital, and just have enough money put away in your brokerage account so you're not having to continuously go back and refund your account each time, in the event that you possibly blow your account. Because so many new traders blow their accounts because they do not know how to trade correctly and they don't practice, one, safe or proper risk management, trade management, money management in a sense. So you have to know when we're trading, before you get into a trade, I'll talk about this, when to get in and when to get out, things of that nature. But today we're talking about capital and how much money you should save, all right? Now, I'm going to say this and use it as an example. When I first started, I put roughly about $2,500 in my account, okay? And now I was new, didn't know truly how much money I should start with. No one told me. I just came up with a figure, okay? Today I have, I use what's called a 10 times rule margin in a sense, or 10 times rule. Basically, whatever the margin is set for that particular market, I believe in having 10 times the margin and trading with one contract. So basically, for every contract you trade, you want to have 10 times the amount of the margin saved up into that account so you can start trading, and it provides you a buffer in the event if you start taking losses or take a significant drawdown. All right, now drawdown is something that a lot of you who are more experienced traders know how to deal with, or well, I shouldn't say deal with, because you should know how to get out of a trade quick enough before you experience any kind of drawdown. All right, now I know that we go through the learning process of starting off as a beginner trader and working our way through the phases of intermediate to become a more experienced and probably professional trader in the end. That's everyone's goal. All right, so most of individuals that follow this channel, we trade primarily the index futures, but it doesn't really matter what market you actually trade, because I truly believe when it comes to the future markets, you should have at least 10 times the margin set aside per contract to trade. All right, I know a lot of you would say, well, that's a lot of money. Yeah, it can be a lot of money, okay? But in today's time, you have the micros that you can trade, okay? When I first started, there were no micros. It was all about stepping up to the game and trading the minis. The cheapest market, I would say, based on the margin, was the ES. And most people start off, or most people try to jump into the ES, okay? Because they are attracted to the tick size amount. The ES trades at $12.50 a tick, okay? Now the MES, which is the micro, it trades at $1.25, okay? So there's a difference there. But if you are a beginner trader, and I say this all the time, the quickest way to build an account and go through the learning process to give you the experience or to gain some exposure to the market is to trade the MES, because you're not, for one, going to be leveraging a lot of money, and you're not going to be taking on a lot of risk in the market with trading pennies on the dollar, okay? You have to, but the key to it is knowing when to get out, being able to practice proper risk management, okay, tactics, all right, or strategies. So when it comes to the ESA, for example, I'm going to give you some examples. Lots of people always ask what broker I use. I use AMP Futures, okay? Now, I've been using them since day one, and back then they were partnered with NinjaTrader. Today they are not, okay? But they have a slew of available platforms that they offer or advertise on their website that they partnership with, okay? All right? So I know some people use Sierra charts. So whatever it is, just go to the website and you can see some of the platforms that they are kind of partnering with, that they offer brokering services for, okay? So When I started, Ninja Trader they were partnering. Okay, I got grandfathered in because I am a prior client and I've been with them since day one and never switched. So, and I like AM Futures. Okay, um, to be honest with you, and I believe their fees, to me, they're fair. As far as the round term fees. All right. So, but anyways, you have to find a broker that's going to work for you. Okay. But what we're talking about today is capital, money, how much you should save to be able to get you into the game or some skin into the game to be able to start trading. Again, beginner traders, start with the MES. Or the MNQ, okay? The micro size index futures, okay? Start with that because you need to gain some exposure and build up a skill level, okay? So when it comes to margins, let's talk about that now. Let's take, for example, here. This is AMP Futures website. And I pulled up the margins, okay? For the micro E-mini S&P 500, the MES, you see here, it's $40, per contract pretty much. So you have to have at least $40 into your account to trade one contract. Now, lots of people think that, and new beginner traders say, I'm gonna put $40 in my account, I'm gonna start trading one contract. Well, you do that, and then the moment you fall under that thresh, then you can't trade anymore. I believe in have a safety net of 10 times rule, meaning 10 times whatever this margin is right here. So if it's $40 per contract, have at least $400 placed into your account and trade one contract per $400. Some people can't grasp that idea from a logical standpoint, but it basically safe nets you, protects your capital, protects you, so you're not having to run back and put or deposit money into your brokerage account left and right, because as new traders, you're going to take losses, okay? All right? But with the MES or the MNQ, okay, or the MYM, markets like that, you're trading pennies on a dollar. If you practice, again, proper risk management, you'll be able to get out and protect your capital and hopefully turn a losing trade back into a winning trade and make some run or have some runners to pick up some additional gains, okay? That's what I'm talking about. So I would have if you're trading the micro ES as an example, again, it can be the MNQ, all right, have at least $400 per contract, okay, to trade with, all right? So which means that trade one contract, have $400 in the account, okay, to trade one contract. Build it up. When you get to 800, trade two contracts, all right? Now, some people will say, okay, well, I'm going to trade two contracts on $400. You can do that, okay, but you're just risking a little bit more capital, all right? If you feel comfortable doing so, then do so. You have, with $400 into your brokerage account, trading the micro ES, you can trade up to 10 contracts, all right? But I wouldn't recommend doing that, okay? Again, that 10%, the 10 times rule is what I would stick with and slowly build up an account because that's what you're aiming for is to build up an account to maybe possibly move over and start trading some of the larger markets. Now, with the MNQ, yes, it does require more capital to be able to trade this particular market, okay? Now, it's versus the MES, okay, is a $100 margin, okay, which means you have to have at least $100 in your brokerage account to trade one contract. 10 times the rule, that means having at least $1,000 in there to trade one contract to give you a buffer for a safety net in the event you start taking on or incurring some losses, okay? So you can trade two contracts if you choose to. That's up to you. But if you practice the 10 times rule and you slowly first of all, you must be able to trade correctly, okay? Be able to be educated and have some experience, practicing before you go into live trading, meaning demo, okay? Get some experience or exposure into the markets before you switch over and start trading with your own capital. Now, some of you may be trading with prop firm money. I'm not speaking on that because I don't trade that type of, I don't trade prop firm capital or money, okay? But I'm not bashing any company out there or whatever the case is, or anyone that's a trader that trades with that type of money. That's up to you, okay? But again, I mean, you do have opportunities or alternatives out there, I should say, whether it's trading with your own capital or using prop firm money. But again, if it's someone that's trading with your own capital, I would maybe take heed and think about the 10-time rule, and build up an account that way. Now, one thing I do want to say is, please do not trade with money that you cannot afford to lose, okay? All right? Meaning money that you're not going to be emotionally attached to, in a sense. Yes, I know money is money and we work hard to save and put it away to do other things with. But when it comes to money to fund your trading account, you should, I guess, separate yourself from that money in a sense, okay? And think about, hey, I'm just using this to be able to get into trading, something that I'm passionate about and I'm looking to learn. And don't start trading live until you know what you're doing, okay? I mean, you are completely educated. You've trained yourself, or maybe learned through from someone else, whatever the case is. I trade supply and demand. I don't tell, I tell people on the channel, you don't have to trade just like me. I just share. I'm here to share my experience and how I trade with the community, okay? And I'm hoping to build a community around that and continue for things to grow, all right? And people here on the channel and I'm part of the Discord community. Again, one thing I do want to say, if you're interested in joining the Discord, find that link down in the description portion of the video and invite yourself in. But the community is growing, and that's the purpose here. I want to share and inspire other people, okay? But, you have your own strategy and your own way of trading. You can still join us. You don't have to, trade like me. I tell everyone that. I'm just here to share my experience and how I trade, all right? It's up to you to choose, how you trade. All right, getting back to the topic here. So, be able to separate yourself from the actual money, okay? You should have whatever money you've earned to make to pay your bills with, or to use to do other things with, as your primary source of money, that pot that you need to pay bills with and take care of your livelihood at the end of the day. Don't touch that money, okay? Money you're looking to, maybe you're taking a little bit out of that pot each month to put into your savings, or to put it into your savings for your trading, for your brokerage account. Don't touch that money, okay? That money there should go into that account, and you should not feel emotionally attached to that money, okay? All right? Because you got to start somewhere. It's just like any business. You have to be able to take money to be able to build that business, all right? At the end of the day, if it doesn't work out, then, you have to understand those are the risks that we take and creating businesses, all right? And falling behind things that we love to do. If it doesn't work, we move on to the next thing, correct? But for me, ultimately, I was so passionate about this. I was all in, and there was no turning back. I'm sure a lot of you guys are like that too. All right. But again, getting back here, so it depends on which market you want to trade. Okay. Yes, the Nasdaq does require a little bit more capital when it comes to the margin to be able to trade it. But it's funny because the thing about it is that the Nasdaq, even though it requires more margin. Now, again, it depends on your broker. I mean, most brokers are probably having a $40 margin to trade the micros for the ES, and then $100 to trade the micro NASDAQ, okay? But the difference is that some people can't really grasp it, but, the margin is lower to trade the micro ES, but the tick value is higher. The margin is higher to trade the NASDAQ, but the tick value is lower. I know it seems funny, okay, but it is what it is, all right? But the thing about it is there is more. The ES is a lot more. It's a thicker market, and you really have to know what you're doing to trade that market. The NASDAQ swings, so, there's a lot more movement, but there's a lot more risk as well. I would say that, okay? It really is, because it's not a forgiving market. When it moves, it's going to move in its direction, and hopefully you're able to understand what's going on when it comes to market structure and price action, okay? But again, this video is about saving, how much money we need to put into our brokerage account, and looking at the actual margins. And that's where the rule of thumb comes into play for me when it comes to the actual margins, all right? Now, again, check with your broker, I'm sure, or a broker of choice that you're choosing to go with, and look at what the requirements are for the margins. But I would say that if you practice that 10 times rule, that you're going to safe net yourself. You're going to protect yourself of having to go back and deposit money over and over again, okay? Now, if we look at the E-minis, okay, yeah, it's a step up, okay? It's 10 times the amount, right? So $40 for the micros, for the E-minis is $400 for the ES, okay? So same rule, 10 times, which means that I would recommend, and it's just my recommendation, not saying you have to, 10 times rule, $4,000 to trade one contract. So for every $4,000 you have in your account or saved up, you can trade one contract with. Again, it safety nets you, protects you, and gives you, a measure of being able to catch yourself you know, if you have a losing trade, or you take a little bit of drawdown, you can still get back into the game because you have the capital in your account to rebuild again, or at least try to build up from that again. All right. The E-mini NASDAQ, $1,000. So which means 10 times rule means for every one contract we want to trade with the E-mini NASDAQ, we want to have $10,000 in our account. Some people say, wow, $10,000 for one contract? I could trade a whole lot more. Yeah, you could trade up to 10 contracts, right? But think about it. If you take on that risk to try to trade 10 contracts with $10,000, that market comes back against you. You're taking a lot of drawdown. Say for instance, you can blow that account very quick. All right. Now, if you wanted to test the market with 2 contracts, I wouldn't go more than 2 contracts when having a $10,000 account. Okay, following that 10 times rule. All right. Build your account up, all right? Allow yourself to build that account up. And you can do so trading that because the margins, or I should say, the actual tick values increase when you step up from the micros to the E-mini. So with the E-mini S&P, it is $12.50, okay? With the micros, $1.25. With the E-mini NASDAQ, it's $5 per tick versus 50 cents a tick with the micros. So, you know, I'm just putting that out there. You can practice it, use it in your own trading plan, you know, and, you know, you can build your account that way. I'm just discussing a way for you to be able to safe net, to guard yourself in the event you take losses. So many people, you hear it all the time. I'm sure you guys know that are watching this. Maybe you're a new trader and you just can't grasp it right now because you haven't been there. Trust me, you talk to anybody with a little bit of experience and ask them, how many accounts did you actually blow before you got it right? And then you ask them, what should you have done or what could you have done to help protect yourself? Well, this is one strategy I feel that works, okay, in protecting yourself as a new trader. It allows you to build up an ample amount of capital, but also protect the capital too by putting you in a means of trading correctly, all right? You know, not risk management is essential to trading, so you're practicing proper risk management. I'm just going to trade with a little bit and build up each day. People don't believe it. They go for the full gusto. I'm putting all this in my account. I'm laying all my cards on the table. And I'm going to trade full margin, right? Or leverage everything I got. If you do that, you're going to take a bad trade and it's going to blow your account. All right. Allow yourself to be able to always be able to step back into the market and without having to blow your account over and over and over. I'm sure you guys have heard tons of traders have blown their accounts once, twice, 3 times, 4 times. Probably some as many as 10 times, okay? So just practice proper risk management and know how much money to correctly put into your brokerage account, okay? It's going to be up to you. I'm just giving you an example of what's worked for me and things that I stick for, things I use in my own trading today that works for me. Now, again, when it comes to the brokers, the margins may be different, so you need to discuss that with your broker to see, what are the margins for the micros versus the E-minis. Again, we're talking about the index futures, okay? But that's all I wanted to share with you guys today. Hopefully you gain some value out of the information, and maybe you're going to practice it as a rule or write it down, write it down in a notepad somewhere, and implement it into your own trading plan, okay? But I appreciate everyone that's tuning in on the daily watching the videos. If you haven't taken the time to go ahead and sub, please take the time now to go ahead and click on that sub button down below. Subscribe to the channel. Make sure to turn on all your post notifications, and please do me a favor and drop a like on the video, okay? So we can continue growing this channel so that traders just like yourself can gain access and the information be put in front of them for free of charge so they can, become better traders as well. It's all about each one teach one and allowing or showing people the way. That's what I believe in, okay? And also, if you're interested in joining the Discord community, we're growing by the day. I think there's over 2,000 members on the Discord community now. I haven't looked in a while, but find the link to the Discord down in the description portion of the video. Click on it, invite yourself in, come over and join us on the trading floor each morning during the New York session, and let's catch some trades together, okay? Outside of that, I wish everyone a great and successful trading day. Today is Columbus Day, or Indigenous Day, they call it now. So it's a bank holiday. So, I've been I taking like one trade today, kind of taking it lightly. But I wish everyone a successful trading week, the rest and the remaining part of the week. Take care.